If I'm going to raise the gap funding, which is so easy for you guys to raise, I'm going to want 25% equity. And they called me and they're like, hey, we're growing so fast that we don't even want to worry about raising the money anymore. Will you just raise the money for us and we'll give you equity? Now you can park your private money lenders' money into their deals or your deals and start earning 25 to 50% equity, multiple streams of income by leveraging this one skill set. So today's video is going to be a bit different. It's actually one of my favorite types of content. It's real, it's raw, it is unfiltered, and you're about to watch an actual conversation unfold real time. What you're about to see is a phone call that I had with Michael and Grace Santos. They are members of the RPM family. They have been with me inside of the coaching program for over 3 years. And yes, as a result, we have turned into good friends. They have been with me for over 3 years. They've raised over $8 million in private money, and they are out there just crushing it in South Bend, Indiana right now. They have partnered with local athletes, former NFL players. They've transitioned from residential fix and flips into new builds, and they've done a really good job at building their power team. But here's what happened. They called me, and instead of them going on to raise the money, just like I taught them to do, they asked me to be their capital partner. Now, pay attention to a few specific things as you watch this call unfold. There are several different lessons that are layered into every part of this conversation. Number one, watch how I handle the equity conversation. Because a lot of you guys get weird when money comes up. You get quiet, you start hedging and saying things like, well, whatever works for you, or what do you prefer? That's not what I do. I always have a standard process. Number two, watch how fast I just move on to the next step without overcomplicating it or overwhelming them. We're not signing any contracts. We're not reviewing every single financial detail. We're just going to identify what the next step is. That's it. And then number three, watch what I tell them that they do and don't need. As their coach and their friend, my job is to be real, to tell them the truth. Even when the truth is, you don't need me for this. You know how to raise unlimited capital. So this is what this entire series is all about. Real deals, real conversations, and real lessons so that you guys can go out there and do the exact same thing. Let's get into it. So a capital partner is someone who comes in, it's a true partnership, and they take a certain percentage of equity in the investor's deal as a result of raising the money. It's not just raising the money. It's not just making an intro. You don't just walk away. You are head of investor relations, for example. So you raise the money, you manage the paperwork, you manage the wires, you manage the bank account, you manage the monthly updates. You are the face of the partnerships. In a perfect world, your private money lender shouldn't even need to talk to your business partners. That is your role. That is how you divide and conquer. You're going to get out there and do a very good job of explaining just that as you continue to build rapport and trust. All that said, there's no need to start going into the do's and don'ts of capital partnerships and why you're there in the very beginning, right? You're building rapport and trust, and you and your partners have deals in South Bend, Indiana, for example, that you're taking down. It's not, hi, my name's Amy and I'm raising money for Michael and Grace Santos. No one wants to talk to the middleman. And by the way, you are not the middleman. You handle the most important thing, which is finding the money. You solve the money problem for the real estate investor. So at the end of the day, a capital partner raises the private money for another investor's deal who they have properly vetted and takes an equity split in the profits in return rather than just earning a flat fee in the form of a finder's fee or an interest rate. It's a true partnership. By the way, you guys, when you're someone's capital partner, you don't just get a piece of the upside. You got to talk about the losses too. So if you're a 25% equity partner and you guys crush it and profit, cool. You get 25% of the projected net profit. If the deal results in a loss, guess what? You're on the hook for 25% of that loss. There are several different ways that you can approach this contractually. You can sign a JV agreement with you and the investor. You can create a partnership LLC. But one of the coolest things to recognize at this point is you're out there raising money 24/7. You've got your own deals coming in. You're flipping new built burrs. You're buying turnkey rentals, taking down multifamily, whatever you want to do. But now you are leveraging this multi-million-dollar skill set, this one skill set, to generate multiple streams of income. In addition to your own deal flow, maybe you are earning a finder's fee. Now you've added capital partnership as a third stream of income. Eventually, you've done a great job of building your dream team. Now you've got referral fees coming in from your trusted team members, affiliate fees. This is how you take one skill set, which is a multi-million-dollar skill set, and start to generate multiple streams of income right now. Congrats, you guys are crushing it. How much longer are you staying in Indiana?
So we're gonna be here until next Saturday. So we're Lisa is actually flying in.
Who's Lisa?
My mother.
Oh, she is?
Yeah.
She's one of the private.
He's one of the partners for our one that we're going to be furnishing. We're furnishing one right now.
Okay.
And she's a partner in that one. And I also want to, because she wants to be in our market, so I want to introduce her to like our contractor.
Oh, great.
Yeah.
Okay. So you guys have, okay, Cliff Notes version, and then I'll tell you how I can help. So you have 2 new deals under contract. You're raising money for both, 100,000 on one, and what was the other one, 150?
It's almost like, basically like, it's almost like anywhere between like 150 to 250.
Okay. And when is closing on both of those?
So the one on the one is like the 250. That one is just continuation of our new construction because we were basically raising little by little. So that way we're not like paying the full interest right away because it's like each new build is like by process.
Mm-hmm.
And then the one is for 100K. That one we're closing next Friday.
Next Friday. Okay. Okay. So you're asking me if I want to either be a private money lender, but you're also open. Are you still open to me being a capital partner?
We are. Of course, the only thing is like we're not very. I guess like we haven't been doing that. We've always been
Right.
And so like for us, it's like kind of like a learning thing. We're like, okay, we're gonna have a partner. And I always want to be like, hey, like what are responsibilities,
Right.
things like that. Yeah.
Yeah. So first of all, as your friend and coach, I'm going to tell you, you don't need a capital partner. Let's take a moment to pause and check out what just happened, because most people would never say that. They came to me asking me to be their capital partner, and my first response was, you don't need me. You guys can raise this on your own. Why would I say that? Well, number one, I'm their coach, and the truth is $100,000 in 5 days for investors who have already raised $8 million, that's not a hard lift. They don't need me. The reason I still said yes when they leaned into it is because there is a difference between they can do it versus does it actually serve them to have a partner right now. But the lesson right here is this. Tell people the truth, even when it costs you the deal. The relationship is always worth more than the transaction. You and Grace can easily go raise 100,000 for next Friday's closing, and then the 250 for your current construction. So you don't need it. I will gladly take money from you and be your capital partner. But for me, it's exactly what I teach, right? If I'm going to raise the gap funding, which is so easy for you guys to raise, I'm going to want 25% equity. So I don't think you need to give up the equity. If you want to, sure, I'll do it.
Okay.
And you don't have to decide right now.
I'm going to be very honest with you. Like I think 25% is where we're at.
25% is what?
25% is where we're at if you were to raise 100.
So you're saying you were thinking about offering 25%, or that's your total profit?
No.
Okay.
No. That's what we're.
Yeah.
Mean raise is kind of like our number.
Okay. Yeah, I mean, if you guys are cool with that and you don't have to decide right now, I'm down. I will do it. Let's talk about that number, 25%. That's what I said, and that's what I meant. And I didn't flinch or get nervous. A lot of you, when you get into these capital partnership conversations, you start negotiating with yourself before the other person even pushes back. You're sitting there like, well, I was thinking more like 15, but I could do 10. And honestly, like, I don't know, what feels right to you? Stop. That is not a partnership. That is you asking for permission to be in the deal. Remember, they need you more than you need them. Know your number, say your number, and then let them respond. 25% is my standard process. It is my requirement for being someone's capital partner if I'm raising the gap funding. And of course, managing the entire capital raise on behalf of our partnership, right? That's the value that I bring to the table. And if the deal doesn't work for them at 25%, then it's probably not the right structure. It's probably not the right partnership. And that's okay. I'm not going to negotiate 25%. And if I raise it all, then it's 50%. Also, notice how I told them up front, if we lose on the deal, I'm on the hook for 25% of the loss too, right? That's a true partnership. I'm not just showing up for the wins. And I don't need any information right now about like the demographic or anything. All I need right now is I just need 2 things. I need the RPM's deal analyzer and then the CMA that you use to come up with your figures. That's all I need. This is the part for you to really hone in and lock in on. We could have spent the next 45 minutes going through every single detail of these 2 deals, every single hypothetical what-if scenario, the comps, the square footage, the contractor bids, the market analysis, all of it. But we didn't. Why? Because that's not the next step. None of that matters yet. The next step is simple. Send me the deal analyzer. Send me the CMA in a very specific manner. I'm going to underwrite the deal my own way, and then we'll hop on a call on Monday with more information. If it still looks good good to me. If you guys are still cool, you slept on it, great. Then we'll talk about the next step. So at this point now, we've agreed on the overarching partnership, the equity split. And even though I trust them and love them, I still need to do my own due diligence, right? I still need to underwrite the deal with my own deal analyzer to see, are we still coming up with the same number? I bought myself time over the weekend in order to do that. One of the biggest mistakes I see every investor make, and this is true whether you're raising private money, structuring a partnership, underwriting a deal, is they try to solve every single problem that's not even relevant. You start drowning in the 15 things that could go wrong instead of just focusing on the next 2 action items right in front of you. Right now, the next 2 action items are I receive the documents and I complete my own underwriting process. That's it. Everything else gets handled next. I'm going to start raising money right now, but I can be available for a focused strategic call on Monday.
Okay, that's perfect.
And then
I'll get the packet and then I'll send it to you.
Okay, cool. So then what we'll do is, then I'll have more questions, right? About how long I'm going to write everything down, because I have to be able to answer all the questions on behalf of us, right, for the private money lenders. But for now, I just want to double check the numbers, like in my own way of underwriting, and then I know you'll have great responses to all of them. And then you and I can talk about, all right, we'll probably just do a JV agreement, or we could do a partnership LLC. I don't think we need to, but we could talk about the pros and cons and
yeah.
You know,
I think the agreement is kind of the easier way because I mean we're kind of built on trust here, but like we definitely want to lay down all the terms of like a partnership like this. It's kind of like so yeah.
Actually, you know what I'll do? I'll just share the JV agreement that I used with Melissa, and then you guys can look at it.
Oh, okay, sounds good.
Okay, I'll send that to you guys. And again, if you decide like tonight you're like I don't want to do it, that's fine. You're not going to offend me. Just, I think you can be 100% like honest with me.
Yeah, definitely. Yeah, like Grace and I are gonna talk about it, and because ultimately, like we do want to work with you. We do like I kind of feel like that's one of our like.
I should just raise the money here.
Or like in our business, but also. It kind of just takes off a little burden from me because right now, like with the closing so close and
Right.
having a lot of people on our plate, like
Because we want to make sure we're managing and making sure everything's running smoothly as well.
yeah.
Yeah, okay. No, I think that's great. So, I mean, I'm excited. Either way, again, you don't need me, but I'm down. Like, I will take 25% of your profits
That's totally
in
fine.
the most respectful and loving way
That's the
ever.
profit going around.
Okay. Okay, cool. But I mean, that's exactly what Melissa and Bridget said, even though me and Melissa lost money. Okay, so there's a benefit, you guys. If we lose, which we won't, I'm going to cover 25% of the loss.
Okay, well, I don't like thinking that way because so far, we haven't talked about any losses and we haven't had any losses.
We're not going to have any.
We're not. I'm gonna knock on this house that we're walking through right now.
Okay. All right, go walk your property. We're going to grab lunch and then let's talk on Monday, but I'll email you the JV agreement
Okay.
today.
I'll send you everything on text message and I'll send you an email as well.
Okay, perfect. That sounds great, guys. Okay, I'll talk to you soon. Okay, bye.
Okay, bye.
So, you guys, this is a great example of unlock your buying power. Learn how to raise private money. I got a phone call from Michael and Grace. They are a part of RPM. They have paid me thousands of dollars to teach them how to raise private money. They raised private money successfully. They've actually raised over $8 million. And they called me and they're like, hey, we're growing so fast that we don't even want to worry about raising the money anymore. So will you just raise the money for us and we'll give you equity? Like you can be our capital partner. And I just said to them, yes, give me your money. But why? Because I know you guys can do this on your own. And it's just like Bridget, just like Melissa. They don't want to, right? They want to focus on scaling their business in Indiana and have me solve the money problem for them. So for everyone out there watching this video, keep doing your flips, keep doing your multifamilies, keep doing whatever you're doing, your BRRRRs, your MTRs. But as you raise private money 24/7, you're going to have more money coming in than you need. Go find one person, maybe get crazy and find 2 people and solve the money problem for them. You're raising money anyways. Now you can park your private money lenders' money into their deals or your deals and start earning 25 to 50% equity. Multiple streams of income by leveraging this one skill set. Yeah, so right now they've got 2 new deals they put under contract. One of them only requires $100,000, and another one only requires $250,000. So the $100,000 they need in a week and a half to 2 weeks. Fine, not a big deal. So that's why I just said right now, hey, we'll work through the details later. But if you're open to the 25% equity split, cool. I trust because we have a relationship, they're not new, right? The conversation would be very different if they were somebody who I just met. I've known them for over 3 years. I said, hey, let me know if you guys are in and I'll start raising the money like right now. But in the meantime, I got to hustle. I got to learn about their team. I got to learn about their contractors, the market in Indiana, what their strategy is, their underwriting process. So right now I just said, hey, send me the deal analyzer. Let me underwrite it in my own way and make sure, number one, our numbers align. And in the meantime, I'm going to send them a copy of my JV agreement. And as long as we're still on the same page, then we'll go to the next step. We're not overwhelming ourselves with the 15 things that come later. It's just the next 2 steps. So my JV agreement, it covers a lot. I want to say it almost covers everything. What if we can't agree on a price drop? What if we can't agree on roles and responsibilities? How are we going to divide and conquer? Who has the final say on every single hypothetical what if scenario? So on your contract or JV agreement, you do want to get detailed. You want to think about every scenario, good and bad, that can happen, including the losses. I just told them, even though I'm going to earn 25% of your projected profit, if you guys take a loss, I'm on the hook for 25% of the loss too, right? So it's a true partnership. It's not, I'm just in it for the win and you guys are on your own if you take a loss. So this is why learning how to raise private money is so powerful. You can literally master this one skill set and generate multiple streams of income, over 5 different streams of income, passively while you're still doing your own deals. So now we are going to wrap this episode with just one thing for you to sit on. Michael and Grace didn't call me because they couldn't raise the money. They called me because they are scaling so fast that raising money has now become a distraction and a bottleneck in their business. So think about that for a second. This is what mastering this $1 million skill set actually does for you. It does not just solve the money problem for your current deals. It eventually becomes a skill that you can leverage for other people's deals, for partnerships, in order to generate multiple streams of income while you stay locked in on what you do best, raising private money. This is exactly what I teach inside of RPM, and that is exactly what you're going to watch play out in real time throughout this entire series. Episode 2 is coming soon. We are going to get into the nitty-gritty, what happened on the Monday call, the underwriting process, the JV agreement, the do's and don'ts, the exact questions I asked before I ever committed a single dollar. Make sure you are subscribed so that you don't miss it. And if you're watching this right now thinking, I want to be the one raising money, not just for my own deals, but at this level, then drop a comment below or hit that link and let's talk. I will see you in episode 2. Now, is this where I say, don't start calling me to be your capital partner because I don't even know you? That's not what this is about. All right, guys, enjoy. Keep it real. See you in the next episode.